Hi friends, let's discuss about technical analysis today, another important part of stock market basics. Usually, fundamental analysis is meant for finding out the correct stocks to be invested, and then technical analysis is done for finding out the better time to enter these stocks. The stock markets are volatile and the prices of the stocks move up and down depending on various factors, which we have discussed in earlier video of fundamental analysis. In case you have not seen this video, please do watch the same, the link is provided in the description box. Now let's understand the price movement of these stocks in connection with the fundamental strengths and weaknesses. How the macroeconomic factors impact on the prices. Friends, it's basic economics. The demand and supply decide the market price. If the demand for a particular stock is more, there are more buyers in the market, then the price will go up, and if the supply, that means sellers are more in the market, the price will go down. Now, why the buyers will be more in any particular stock? If the investors find that the stock is performing better and will fetch good returns for the investors, they will surely go for buying such stock. Similarly, if the stock is not performing, or the company is losing its position in the market, or making losses, the investors will start selling such stock to come out. These are company-specific, friends. But there are other factors related to economy at large, which impact on the prices in similar fashion. All this we have discussed in the fundamental analysis. So then, why we have to study technical analysis, if the fundamental analysis is capable of providing all required inputs affecting stock prices? Friends, there are two reasons. The first one is obviously to understand the current sentiments and market behavior, current trends. It's always important to see the trend, because trend is the best friend indeed. The another aspect to learn the technical analysis is to judge the fundamental strengths vis-a-vis the price movement. This will provide true insights in case of undervalued stocks, hidden gems. It is not necessary that the prices of the stocks will react at particular one point, because it all depends on market sentiments. At such times, technical analysis will assist in finding out the trends in these respective stocks as well as in overall market also. Friends, as you analyze fundamentals of more and more companies, you will be able to verify these stocks and fine-tune your research further with the help of technical analysis tools. So now, let's first understand technical analysis in more details. Technical analysis is basically study of price movement of the stocks. The data of historical prices is analyzed by using statistical tools, by observing trends and patterns, and based on this the future movement in the prices is judged. Again, this is also a vast subject and lot of parameters are used by various analysts. Further, there are different kind of users of these technical analysis tools in the stock market. For example, intraday traders, swing traders, arbitrage, short-term and long-term investors, etc. Please note the periodicity of parameters used by these different users are diverse, and hence the results also differ for different categories. However, in this video, I am going to discuss about the prominent ones and especially useful for long-term investing. But before we begin today's video, just an appeal to all those who have not seen my earlier videos on stock market basics series, please do watch the same. Also, there is another series on personal financial planning to understand the importance and basics of financial planning. Links are provided in the description box. Please do watch the same and subscribe my channel. Also, please share with your friends and relatives, because knowledge increases by sharing. So friends, Let's start today's topic. Moving average is the simple to understand technique. Basically, there are two types known as simple and exponential moving average. The word simple itself describes the simple moving average and is easy to use method. Whereas exponential means exponentially weighted moving average, where more weight given to latest data points, I mean latest prices, which brings in more relevance also. Though complicated, it actually fine-tunes your research. Further, on the basis of number of days these moving averages are recognized. For example, 10 SMA means 10 days simple moving average, 10 EMA means 10 days exponential moving average, likewise 20 SMA, 20 EMA, 50 EMA, etc. The period further can be considered as 100 days and 200 days also, where the 10, 20 and 50 days are considered as shorter period moving average and 100 and 200 days are considered as longer period moving average. These moving average lines show the trend and the intersection of price line with these trend lines, and also the intersection within the trend lines provide us the signals. Usually two different trend lines are examined. Say for example 10 and 100 days or 20 and 100 days or 50 and 200 days, etc. The first observation is usually when the price line crosses above the moving average line, it indicates the buy signal. Similarly, when it crosses and moves below the moving average line, it indicates weakness, I mean sell signal. In other case, when the shorter period moving average line crosses above the longer period moving average line, it indicates buy signal. On the contrary, when shorter period MA line crosses below the longer period MA line, it indicates sell signal. The next one is MACD oscillator, that is moving average convergence divergence. This is calculated by subtracting longer period EMA from shorter period EMA. MACD is usually displayed with a histogram. Please see the chart on the screen. Another shorter period EMA line is inspected with the MACD line. When this line crosses above the MACD line, the buy signal is indicated. Whereas, when this line crosses below the MACD line, the sell signal is indicated. Also, when these lines cross over or below the zero line, the buy and sell signals are indicated respectively. Further, the histogram is used to observe when the bullish or bearish trend is high. Usually MACD is calculated with 12 periods as shorter and 26 periods as longer with the 9 period signal line. Now let's understand RSI oscillator, which means relative strength indicator. This indicator measures magnitude of recent price changes to estimate the overbought or oversold conditions. This oscillates between 0 to 100. When the line crosses 70, it signifies overbought condition, which means the stock is overvalued and likely to come down. As against, when the line crosses below 30, it signifies oversold, which means stock is undervalued and likely to rise. The RSI oscillator is displayed below the price chart. Please see the chart on the screen. Now, let's understand volume indicators. Volume price trend, that is VPT, and on balance volume, that is OBV, are the two primarily used indicators. Both these indicators measure the cumulative volumes to find out the trend, where there are four probabilities. Number 1, the price and volume both are rising. That means the buyer's interest continues even when the prices are moving up. That shows upward trend. Number 2, the price is rising but volumes are down. That means the buyers lost interest and they are not willing to enter the stock at the higher levels. That is caution moment, and the lower volumes indicates that there may be reversal in the trend. Number 3. The price is falling with the increasing volume, means there are more sellers willing to sell at lower price to come out of the stock, and this shows downward trend. Number 4. The price and the volume both are falling. This means the sellers are not willing to sell at lower price and hold on their positions. This is also a caution moment and reversal in trend may be observed. Friends, volume indicator is examined along with the price chart and usually displayed at the bottom of the chart. Please see the same on the screen. Now, let's understand the another important chart that is known as candlestick. This displays actual price movement wherein the price is shown as one unit, I mean a candle for the desired period. Say for example, we see daily, weekly, monthly, etc. Daily means the one unit for one day. Monthly means single unit price per month. Now in this one unit there are 4 prices involved, that means open, high, low and close for any given period. All these 4 prices are covered in single figure of candle. The candle has a body and 2 wicks. The body signifies open and close, whereas the upper wick shows the high of the period and the lower wick shows the low of the period. The body with black or red color denotes bearish trend, I mean close is lower than the open. On the contrary, if the body is white or green, the close is higher than the open and hence signifies bullish trend. Let's see some of the famous patterns in this trend study. Hammer or inverted hammer. Hammer means small body with long lower wick, whereas inverted hammer means small body with longer upper wick. Both these patterns signify bullish trend. The next one is piercing pattern. The first candle is bearish and the second candle being bullish, where the open is lower than previous day, but close crosses 50% of yesterday's candle. The next, bullish engulfing, is the pattern in which the first candle is bearish, but the next one long engulfing the earlier candle. This signifies the bullish trend. The next is the morning star. In this the first is bearish candle, second is bullish but just lower than the first one. The third is slightly higher than the first one. This again shows a bullish trend. Hanging man is the next one. This is bearish candle with bottom wick signifies change to bearish trend. The next, bearish engulfing, the first candle in this pattern is bullish and the second one is bearish, completely engulfing the first one, and this indicates the bearish trend indeed. The evening star, the first candle is bullish, the second one is bearish just upwards the first one, and then the third one is again bearish, but longer than the first towards downside. The shooting star. This is just opposite the hanging man candle, where the long wick is on the top with bearish candle, indicating bearish reversal signal. Then there is doji pattern, which shows indecision as there is very less difference in open and close. Also this shows that both bulls and bears are in fight to gain the control. Now let's see the support and resistance, which are another critical and important tools available in technical analysis. The price of the stock varies depending on the demand and supply. In the rising trend, when the price moves upwards, the investors who have that stock become the sellers to book their profits, and as such they place their sell orders at various upper levels. These sellers form a supply, I mean increased supply put brakes on the rising trend, and these levels are termed as resistance levels. Similarly, when price of the stock goes down, the interested investors put their buy orders at various lower levels to acquire the stock. So at those lower levels the excess demand is generated, which halts the downtrend, and these levels are termed as support levels. However, the technical analysis is basically a trend analysis, and these support and resistance levels keep on changing every now and then. The breaking of these levels become milestones and the journey continues. The new support and resistance levels are analyzed with the changing prices. Now, let's understand how you will be able to use this. Friends, as mentioned earlier, when you shortlist some stocks, you can place your buy orders on or just before such support levels formed at given time, so that we can acquire these stocks at best possible bargain. Similarly, you can use the resistance levels while exiting the stocks. As you are familiar with the technical tools and analysis, you will be able to judge the market trend and take the advantage. Friends, do pull out some time for your own finances and investments and do your own study before investing. Hope you liked this video and found useful. If so, please do give me a like, which will encourage me to do more such videos. Please do share the same with your friends and relatives and do subscribe my channel if you like the same. Thank you and bye for now, till we meet again in the next video.